He's got it, baby. He's got it. You heard? You see it?
Jared had his doubts that I'd remember to bring it. But luckily I did bring it, and we're both now about to bring it, Pete.
Yep.
The Rebel's Edge, that is. Next week, I think Pete's confirming, but I think he'll be coming to us from Vikings training camp at least one of the days next week.
Yeah.
So that should be fun.
Yep.
There aren't a lot of shows out there that are going to be streaming live from the training camp, Pete, other than Vikings Network.
Well, and you and I both know, John, I mean, NFL there is nothing like it. MLB, nope. NBA, nope. NHL, absolutely not. So it's something fun, something that you and I both participated in. You were with the Bears and I was with the Vikes and Tampa and a few others. But, it's a unique experience. And these training camps, when they get fun, John, is when you've got another team in camp. And later on, we'll talk about some of this in sports. But they have today the Tennessee Titans. Next week, they've got the Arizona Cardinals. So that should be a lot of fun. I think Arizona is an interesting team, if nothing else, because all of the hubbub about the quarterback and not watching film and all these kinds of things and everything that went into last year. So far this year, they're kind of flying under the radar, and they'll be fun to watch out there as we're doing the show.
Absolutely. Well, as you can see from our backdrop here, folks, I am on the SIBO, which is, of course, SIBO Global Markets, and the pit behind me is the S&P 500. Just like yesterday, right over that way, they've got the VIX pit and so forth. But gosh, Pete, they've got, I think, 26 different markets around the world. So it truly is global markets. I mean, They got them in London, they got them in Amsterdam, they've got them in Japan and Canada. I mean, all over the place.
Yeah.
But awesome. That's why they're one of the biggest exchanges in the world.
Yeah. Yeah. Awesome.
Well, let's get started with not just the dancing bears and robots, but the Rebel's Edge, where we bring you, starting with the macro minute. Today, Pete, my macro minute's going to be Bitcoin falling to the lowest level in the last 2 months. This is, by the way, one of the places where that trades, because the SIBO Global Markets group here also trades Bitcoin futures, I think, right? Bitcoin futures. Yep. And
he's got some Fed minutes over there with him.
I do. I've got to have somebody giving me tips from time to time. Fed minutes are also going to be part of this, Pete.
Yep. I agree with that. I think there's a lot of different things you and I could have picked today for the macro side of things. And I'm going to stick with China, and as many of our New York bozos say, China. So the problem right now, John, with these guys is this slowdown is not just a slowdown. It's kind of a prolonged slowdown, and everybody's kind of questioning things right now. Can they even come out of this thing? So I think as that's kind of weighing on their markets, it's clearly going to weigh on our markets as well, because if you're the second biggest economy in the world, you're going to have effects on the rest of the world.
Absolutely. And you know what else is going to have effects on the rest of the world, Pete? The 10-year, 20-year, and 30-year. So my fantastic futures.
Fantastic futures
is going to be the 30-year Treasury, Pete, because it's up 7 basis points today. That pushes it up to 4.42%, just above last year's high right now.
Yeah, John, there's so many different things you could pick from right now in terms of the treasuries or, some of these other things. And I'll tell you what, the 10-year, we've been talking about it for a long time. We said how that when it gets above 4, that becomes an issue for the markets. Well, it's not just up above 4. You look at the 10-year, it actually hit multi-year highs today. It was 4.31. It might even have got higher than that, but it was at least over 4.3. So I think that's something that, when we wonder, well, what's going on with the NASDAQ? Why is it kind of struggling? Why are we seeing some of the selling that we're seeing and everything else? At some point, that is a trigger level, and we've been here, John, now for the entire month of August where we've been above 4.
Yeah, it's not just a day or two now, folks. I mean, here we are 17th of August, and we're still above 4. And like Pete just said, hitting records. All right, let's talk about Walmart, Pete. You can tell me whether or not Walmart's 2% slide is because of the higher interest rates. We do know that the earnings were up about 4%, and the $1.84 a share that they earned on what, $161 billion worth of sale. A lot of that was food and energy, because we need both. And if you leave those in the calculation, that's where a lot of the excess came from, was people gassing up at Walmart because it was cheaper, and the food prices pushing higher still, putting more stress on the consumer.
Yeah, and I'll tell you, John, when you look at those earnings, yes, they're very strong. They're very powerful. They're actually slowing down, but they did beat, as you were just mentioning. And you look at that big number with the revenue. The revenue was absolutely extraordinary. On top of that, how about this one? E-commerce sales were up 24%. So there is a lot of different things. So you'd say to me, well, Pete, well, why the hell is this thing down 2%? And I would come back with, have you seen where it is from the standpoint of the PE of where it is right now? We talk about valuation levels all the time. It's something that you and I focus on very often when we're looking at some of these stocks. We want to know, what does the PE look like? Well, their PE is stretched. It's up there, John, somewhere close to about 30 something. I don't know, 35, 36, something like that. PE. That's a little bit higher than it would normally be, which is somewhere in the 20s. So that might be part of the reason. People love what they're seeing, but there are, all these companies have a PE level that's sort of standard. And when it goes way up or way below, that changes things a little bit in terms of how you want to view things. And when you look at it right now, it's a little bit stretched. So I think that might be part of the reason we're seeing some of that selling.
Yeah. And Pete, now beyond Walmart, you got to talk about what went on in Maui.
Yeah.
Because last Friday, the stock was, in the 30s, $32 a share. Today, it traded down to $10 a share. And we all know why. And we all feel, like anything we could do to help the folks on that island. They are struggling mightily, and it is not a good situation at all. But it's a horrible situation for Hawaiian Electric, symbol HE. And we had unusual activity in that name, Pete, just yesterday. Just yesterday, we had buying in the December 10 puts, which were $5 out of the money, $5 underneath where the stock was trading. And keep in mind that the stock was trading, again, 32 last Friday, $10 today. When it hit $10 today, that meant if you owned them yesterday, you made a 50% profit in one day on those puts, Pete.
Not so bad. That's what the unusual option activity gives us the opportunity to do, John. And sorry, I'm a little bit dark. The sun went away from the clouds are covering it right now. So it looks like I'm in the dark. I didn't lose energy or anything. On top of that, John, how about the fact that they've got these lawsuits, these allegations, all of that? I mean, it's just stacking up against the Hawaiian Electric at this point in time. It's brutal. They made some mistakes. There's no doubt about that. And how much they're going to have to pay for that, that's going to get ugly. That's why we're seeing this big, huge drop that you're talking about. This stock on the 52-week high was over 40, and now we've established new 52-week lows when we hit those $10 levels. It's brutal. Those puts actually were a great tell that this wasn't over. I think when you and I discussed this one earlier in the week, we both said at the same time, hey, look, this is not a falling knife that you need to catch. This thing is not looking pretty, and there's a lot to unpack. Well, there's still a lot to unpack, but at $10, I'd rather be in puts down here right now than calls, even at 10, John.
Yeah, it's ugly, but like we said, if you want to go get a BOGO, folks, that is, you buy 1 month, we give you the second month free. The second month is on us. You can go to marketrebellion.com/bang. That's marketrebellion.com/bang, and you get that BOGO. So in other words, a lot of these trades that Pete and I describe on the show that we tell you, hey, did you see this? Did you see that? Well, you could be trading on those because we're following the smart money in on those trades. Let's talk, Pete, about AHCO, because this is adaptive health. And a stock that we probably wouldn't talk about much, except for this fact. They went and they got a guy who was at another company. Their incoming CEO is a guy named Crispin Tufel. Well, apparently the company he came from ain't real happy about him leaving them and coming over to their competitor. That company would be LINDE, LINDE. And for that reason, Pete, AHCO is down 17% today because they might have to give up on this CEO that they just announced they were bringing in back in June, because apparently he wasn't quite as free to choose as he thought.
I don't know how that whole thing unfolded. I really don't, John. I mean, it's interesting at the very most, but this is a company that also just not long ago had their earnings. Their earnings were good. It wasn't like, this is a company that was absolutely, getting targeted for anything, but their earnings were good. They beat on their earnings. They beat on their revenue. They had a solid performance there, but this is all about the CEO role, and the selling pressure was absolutely brutal in this thing, John. This is one, though, where I think you could let the dust settle for a few days, and then let's take another peek at it, because it's not like that's the only CEO out there who could run this company. And it's something that I think, it's a great knee-jerk reaction, but at some point they'll fill this up, whether it's with this CEO and they work it out a deal or somebody else. But at some point, this is a company that's done pretty well. And when you really look at it, it's down near the 52-week lows. It might be an opportunity. I'm not saying buy it today, but it doesn't mean that this is a stock that's absolutely in the worst shape ever. They're just going to have to figure out, all right, who's going to run this thing? And maybe it's somebody within for a while as a temporary role.
Yeah, I think that's wise advice, Pete. Again, we don't give investment advice, but we do look at situations and we say, this is how we think it might play out. And if indeed, as Pete says, either A, they have to go after another CEO, or B, they get this guy, but they have to negotiate something with the former company. Having this real money-making business that they already have isn't exactly time to throw the baby out with the bathwater.
Right.
So I agree. I'd be a buyer on this dip, even if it's not today, and it might be tomorrow. Let's talk now about CVS, because maybe this is a situation where they need to get revalued significantly. So far, they're only down 10%, but that's because a very populous state, the most populous state in the country, the state of California, is saying, you know what? Blue Shield says we're going to stop using CVS Caremark as our pharmacy benefit manager, their so-called PBM. And instead, they're going to use Amazon and Mark Cuban's company, Pete.
Well, and that's pretty dang interesting, right? I mean, Mark Cuban's got cost plus is what he calls it. Then you've got Amazon, and CVS is probably sitting there with their hands in their pockets going, hey, what in the world just happened? I mean, we're talking about 5 million members, John, for the health side of that. One of the things that we were talking about there. It just makes this whole thing very complicated. This is a stock that has not done well anyway, and now you're hitting near 52-week lows as well. I don't know. This is one where I'd probably stay away for a little while, John, because it's a matter of, can they turn this thing around, or is this something that's going to cascade into something much bigger? And that would be very concerning. So despite the fact that they've got great free cash flow and they traded a fairly reasonable, level of valuation, we were talking about valuations a lot. That's all great. But if they're going to lose to somebody else in a big way, and two of them, Amazon included, this could be a real problem for CVS going forward. And CVS and Walmart and Walgreens had the fortune, John, when you look back at the pandemic, they actually got new customers. People who had never gone there before were starting to go to those two places, and they found out that there were more things other than what they normally would go there for. So that's starting to wear off as well. So there's a lot of reasons why, when you look at some of these names, Walgreens and CVS, why there's pressure. But this on CVS is a lot of pressure.
Yeah, and you got to think, Pete, that other big states like Florida, like Texas, like New York, are going to look at this. And again, this was Blue Shield that did this. So it's not the state of California. I want to be clear about that. But nonetheless, whoever the pharmacy benefit manager is in those other states, they have to be somewhat concerned. Now, that might not be CVS Caremark in those other states, but I think I would put up a short list of the next 4 or 5 big states, Pete, and say, who's the pharmacy benefit manager that services the most people in those states? And I might be a little careful owning that stuff.
Yeah.
All right. Let's talk about the Major League Baseball for a change, Pete, that you love so much. Let's talk about what?
Yeah, I've gotten a little bit more interested. Baseball's gotten a lot of fun, and now this is the time of year when baseball really gets fun, right? I mean, you love the start of the year. Then there's kind of that blah, you get towards the All-Star break and all the rest of it. But then trade deadline, and then the next thing you know, you're starting to move a lot closer to the playoffs. We were talking earlier this week, John, about what are they doing? We're seeing the cream rise to the top. And one of the teams that absolutely is just on fire, and it's worth pointing out, we got one that's on fire and one that's about to burn up. The one that's on fire right now is the LA Dodgers. And when you look at what they've done recently, they got 73 wins. They've got 10 of the last 10 they've won. 15 of the last 17 games they've won. In that 10 of 10, they outscored the opponent 61-22. I mean, this is a team that's pitching well. They're hitting well. They've got a lot. Here's their lineup, John, as far as those that have hit more than 20 home runs. Mookie Betts with 31. Muncie's got 28. Martinez got 25. Freeman's got 23. This team is on fire. Now, in a good way. There's another team out there that's not. They're burning up, and that's the New York Yankees, who just slipped under 500. They're at the bottom of their division in the East. They can't seem to get anything right. And Judge, who's only played in 67 games this year, and he's been out for quite a long time, and he's doing whatever, but he's still the leader in home runs on the team, John. So it tells you a little bit about the rest of the team and how putrid they've been from the plate. So it's the Mets, it's the Yankees. They were supposed to be in that World Series, as a lot of people were talking about. Oh yeah, the Subway World Series is going to be great. It's all in New York. Neither one of them have a shot. I mean, the Yankees are at the bottom. The Mets are at the bottom. This whole thing is starting to fall apart. What do you think? Is this just amazing? And especially when you look at some of the teams, John, with no salaries at all that are leading their way into the playoffs?
Well, I'd start off with, yes, the New York team's not doing well is something that the rest of baseball roots for, Pete, because those guys are way above the spending of any other two teams. So I think people tend to root against them. The fact that they're both in New York plays into it as well. But as far as the Dodgers, this is a 10-game winning streak. And like you said, the Dodgers have been lucky because they had a couple injuries to pitchers. They got this guy, Almonte and Kelly, these two guys that have been, basically sidelined with injuries. But then they get this guy, Varland, up from the minors. They got him back because they had originally drafted him, I think. But he was with the Brewers, and now they got him back in LA, and he started last night, Wednesday, and helped them get to that, 10-win streak. So you've got a team like the Yankees that's struggled with injuries, and they haven't been able to find an answer. And then you have a team like the Dodgers that similarly has a couple injuries that you'd think, since they're pitchers, they handle the ball more than anybody but the catcher. You would think that they would have some difficulty, but instead they were able to meet that challenge, and that speaks well for them going into the playoffs pretty deep, I think, because apparently their depth is just that, pretty deep.
Yeah, it is. Well, there's quite a few different teams out there that are leading as far as cream rising to the top, and it's kind of fun to watch. And I know you've been watching closely with Cincinnati, and they've had their ups and downs, but they're still hanging around, so they're not that far away. They're not at the bottom of the division like the Mets and like the Yankees with those payrolls that they've got. So, hey, how about next? We got Hard Knocks, right? And we already had the second episode. It was great. We're starting to see Aaron Rodgers maybe getting a little bit frustrated, John, and here's why. So Carolina was there with these joint practices that these teams do, and they got after them pretty good. And then you've got Tampa and the joint practices, and they got after them pretty good again. Now, they're missing 3 of the 5 offensive linemen, so it's not necessarily fair to say how bad they were playing because a lot of backups were in there and so forth. But the other day with Tampa, of the 10 plays that they had, John, 6 of them would have been sacks, and Aaron got so frustrated he just yanked and threw the ball over into the crowd. So there's a little frustration going on right now, and they're trying to figure things out. I can say this: what I've seen and what I saw last year was a team that, when the offensive line is healthy, I think they're pretty damn good, and they've got some big high picks on that offensive line as well. So they better be, because they've got everything else. They got the defense and one of the best defensive linemen in all of football. They've got this offense with all these tools that Aaron can throw the ball to. It's going to be interesting, but do you think Aaron starts to spiral at all, John, if this kind of keeps up and they keep hitting him, or what do you think?
Well, I think that would be a natural thing for that to happen, Pete, but I don't think it's going to.
Right.
I think, when you get the starters back in there, even though they've only got 1 Pro Bowl selection, Pete, on the whole offensive line, 1. And I don't know going back how many years that is, but like you say, you draft these guys high, you think they're the guy that's going to help you out. And, sadly, like my Bears have seen from time to time, some of these guys don't work out. I would think that with the combination of Cook being able to put pressure on the defense to not just drop back into pass coverage, I think that's a big thing, and that'll help the offensive line. I think most offensive linemen, Pete, would love just to drive block, but the fact that they do have those weapons, like you said, and Aaron Rodgers, 3 or 4-time MVP, Pete?
Yeah, I think it's 4.
4 times. Yeah, so I think he is not done yet.
No, he's not. Go ahead, John.
I was going to say, if this was, 6 games into the season,
right,
and he's chucking the ball into the stands, that's one thing. It's training camp. So to me, it doesn't mean anything.
Yeah, I'm with you on that. I think that when Dalvin Cook is part of that team, which he already signed, but when he's part of the team, and you've got Breece Hall, the kid from last year who was so good, who had the ACL injury, but he's coming back fairly rapidly from what I hear. I'll tell you what, a quarterback's best friend is one thing. They're running back. The next thing, it's the tight end, and of course the offensive line. So you get a guy like Dalvin Cook, who's a great blocker. He is not a selfish guy, John. I've gotten to know him well. He's great. He's unselfish as much as any running back I've seen. He's willing to block. He's willing to catch the ball. He's willing to run the ball. He just says, hey, what do you want me to do? And he does it. That's going to be great for Aaron Rodgers. I think he's going to love having Dalvin back there with him.
I agree. Well, that's going to do it for us today, Pete. Remember, folks, you can get that BOGO, that buy one, get one free, if you go over to marketrebellion.com/bang. You can get one of our best services. You pay for 1 month, we give you the second month free. And Pete and I will, since this is Thursday, we will not be back until Monday next week. So until then, have a great day, everybody.